Okay, we are back here. We have intermediate accounting part 3 again, and we are now on our module 3, related party disclosures and operating segments. And we have learning objectives such as enumerate examples of related parties. We have to briefly discuss the disclosure requirements for related parties, define and operating segments, describe the management approach of identifying operating segments, and state the quantitative criteria in identifying operating segments, and describe how this criteria is used in conjunction with the management approach. So the topics are related party disclosures and operating segments. So, PAS 24 objective prescribes the necessary disclosure regarding related party relationship and transactions, outstanding balances, and committed between an entity and its related parties. The core principle of this is that the financial position and profit and loss of an entity may be affected by a related party relationship if related party transactions do not occur. The mere existence of the relationship may be sufficient to affect transactions of the entity with other parties. Necessary disclosure, therefore, should be provided to draw users' attention to the possible effect of such relationship and transaction on the financial statement presented. A related party person or entity that is related to reporting entity is preparing a financial statement as PAS 24. And examples of these related parties are investor and investee relationship where control, joint control, or significant influence exists. The key management personnel, close family member, post-employment benefit plan. So, these are examples of related parties. And then definitions of terms. When said to be controlled, an investor controls an investee when the investor is exposed and has rights to variable returns from its involvement with the investee and has the ability to affect those returns through its power over the investee. Significant influence is the power to participate in the financial and operating policy decisions of an entity, but is not control over those policies. Significant influence may be gained by share ownership or statutes or agreement. A joint control is the contractually agreed sharing of control over the economic activity. Then, the key management personnel are those personnel having authority and responsibility for planning, directing and controlling of the activities of the entity, direct or indirectly, including any directions, whether executive or otherwise, of that entity. A close member of the family of an individual means individual domestic partner and children. B. Children of individual domestic partner and dependents of the individual or individual domestic partner. So, these are considered to be a close member of the family. Then, a related party transaction is a transfer of resources, services, obligations between a reporting entity and a related party, regardless of whether a price is charged. Unrelated parties are the following are not related parties. Example, two entities simply because they have a director in common. So, they are not related parties. No? Then, two venturer simply because they share joint control over a joint venture. Then, Providers of finance, trade unions, public utilities, departments and agencies and government does not control, jointly control or significantly influence the reporting entity simply by virtue of their normal dealings in the entity. A customer, supplier, franchisor, distributor, or general agent with whom an entity transacts a significant volume of business simply by virtue of their resulting economic dependence. These are examples of unrelated parties. Then disclosure. A parent-subsidiary relationship regardless of whether there have been transactions between them. Key management personnel compensation broken down into following categories: spots and loans to key management personnel. Related party transactions, nature of transaction, outstanding balances. Disclosure that related party transactions were made on terms of equivalent of those prevailing of the arm's length transactions are made only if such terms can be substantiated or can be provided. No? We go now to operating segments related standard. So, PFRS number 8. Core principle. An entity shall disclose information to enable users of its financial statement to evaluate the nature and financial effect of the business activities in which engages the economic environment in which it operates. So, the scope applies to the separate individual and consolidated financial statements of an entity which is publicly listed or in the process of enlisting publicly. And an unlisted entity that chooses to apply PFRS 8 shall comply with all the requirements. Otherwise, it shall not describe information as segments information. If a financial report contains the both consolidated and separate financial statements of a parent that is within the scope of PFRS 8, segment information are required only in the consolidated financial statement. An operating segment is a component of an entity, engages in business activities from which it may earn revenues and incurs expenses, including revenues and expenses relating to transaction with other components of the same entity, or whose operating results are regularly reviewed by entity's chief operating decision maker to make decisions about the resources to be allocated to segments and assess its performance, and for which discrete financial information is available. Components of an entity comprises operation and cash flows that can be clearly distinguished operationally and for financial reporting purposes. From the rest of the entity, it can be cash generating units or group of cash generating units. We got the reportable segments. An entity shall report separately information about operating segments that management uses in making decisions about operating matters, or those which results from aggregating two or more of those segments and qualify under the quantitative threshold. The management approach to identify reportable segments. Under this approach, operating segments are identified on the basis of internal reports that are regularly reviewed by the entity's chief operating decision maker in order to allocate sources to the segment and assess its performance. Aggregation criteria. The two or more operating segments may be aggregated into a single operating segment if the segments have similar economic characteristics and the segments are similar in each of the following aspects: the nature of the product and services, the nature, production, and process, types and class of customer for their products and services, the methods used to distribute their products and provide their services, the nature of regulatory environment, if applicable, as such as bank, insurance, or public utilities. So, the quantitative threshold, an entity shall report separate information about the operating segments that meet any of the following quantitative threshold. We got the segment's revenue is at least 10% of the total revenue. We got the external and the internal. So, income from the ordinary and income from other income na. Segment assets is at least 10% of the total asset, external and internal. Intersegment receivables. The segment profit and loss is at least 10% of the greater an absolute amount in the amount reportable combined reported profit of all operating segment did not report a loss. A combined reported loss of all operating segment that reported a loss. Limit on external revenue. The external revenue reported by a reportable segment shall be at least 75% of entity's external revenue. Disclosure of major customer. A major customer is a single external customer providing revenue of 10% or more of entity's revenue. Other disclosures. Entity-wide disclosure applied to all entities subject to PFRS 8, including these entities that have a single reportable segment. Revenues from external customers attributed to entities' country of domicile and attributed to all foreign countries in total from which the entity derives revenue. A non-current asset other than financial instrument, deferred tax, post-employment benefit assets, rights arising from under the insurance contract located in entity's country of domicile and located in all foreign countries in which the entity holds asset. So, we are through with our module 3 and the thank you. And the next module will be interim financial reporting and development stage entity. Do the activities in every module and pass within a given period. Always stay safe for next week. That is week 5. We are going to have your final examination part 1, which is composed of module 1, 2, and 3. So the examination will be posted and you have allotted you got 3 hour allotted time. Thank you.